Welcome back to another Trading 212 portfolio update, and obviously we're going to be using Trading 212. I've been using this for the last few years now, since the start of this channel really, and if you want a free fractional share worth up to £100 and start off investing for yourself, then click the link in the description below and also use code BEN on Trading 212 app and you'll get a free fractional share worth up to £100, and you can actually use that code even if you've signed up in the last 10 days. So make sure to use that code if you haven't already. So we've got a lot to go through with this portfolio. It's changed a lot, and also we've had some crazy deals with some of the stocks that we do hold as well. So we'll go through some of them and talk about that. So the first one we're up with is AMD, and this is becoming one of my favorite stocks, I'll be honest, and I've been doing more research into it, and you realize how much of an opportunity AMD really is at these prices, in my opinion. Obviously this is all my opinion and my views, and I obviously could get it wrong, but I really do strongly believe that this has got a huge amount of growth. And a lot of people say, why aren't you getting into Nvidia and why are you choosing AMD? One, Nvidia is a solid company, and it will be a solid company for the next few years, especially with this whole AI situation. The problem is it's had its crazy growth. It still will have crazy growth, but it's had its crazy growth, and it's a big company now. It's a massive market cap. It's taken a lot of the market share, and I think AMD has been a lagger behind really, and it's not had much opportunity just yet, and it's a lot smaller, the company, so it's got a lot more room to grow. It's got a lot more room to have them crazy revenue growth, them crazy EPS beats, and I think it will start having those situations very soon in the next few months. The data growth has been really good and strong. I know it didn't beat analyst expectations, but it was still really good. 69% year on year, and I just think that's going to carry on, if not get better, and especially with the new chips that they've got with AMD and the orders that they've been getting through. I'll show you a screenshot now. So Oracle has signed a multi-billion-dollar contract with AMD to build a cluster of 30,000 of their latest chips, which are the MI355X GPUs. Bit of a mouthful that. I don't know why I struggled with that so much. And this is another thing showing you that Meta are using the AMD chips as well. So yeah, that was just a few bits of news that we chucked in to the Discord chat as well, which is free by the way, link in the description. So as you can see, I've ended up buying more shares of AMD. The people in the buyers and sales group would have seen this, and yeah, I've been buying the shares up. I did say I want to get 100 shares, so I'm 10 shares off. Can I get there? We'll see, because the market's been running up recently. I wonder if it is the bottom. Comment below if you think it's a bottom, or do you think we've got a lot more to go? And yeah, I've brought my average down to 108, so it's not too bad. I'm just trying to get as much shares as I can before I think the settlement will change with AMD and just explode. Next up, we've got Fubo, and to be fair, I've been actually thinking about buying a few shares of Fubo, but it's not a priority. AMD is a priority, Grab is, and SoFi is at the moment of buying shares. Even Tesla was a consideration. There's just so many stocks at the moment that I want to just buy because of the prices, and you can't buy them all. But I've been trying my best to just try and chuck in as much money as I can. And yeah, Fubo is actually one I would get into, because yes, it's a bit more speculative, a bit more risky, but there's such massive upside with this, especially if the Disney acquisition does properly go through. Free cash flow positive in the last quarter, which is really good sign. And like I say, they will start becoming profitable in my opinion, and that's when the share price will probably start going crazy. So we'll see at the back end of this year, Fubo at maybe could get to $10, maybe. We'll see though. But I think Fubo is a really interesting stock, to be honest with you, and it'll be interesting to see how things go with Fubo. Grab has absolutely had a massive hit, to be honest with you, down 12%, 14% in the last 3 months. Yeah, Grab's had a huge hit. We're down 12% on Grab, and like I say, I would like to buy more shares of Grab. I just don't have enough money at the moment to just chuck into all these stocks that I want to buy, because I also want to build a big position in AMD. So this is the other stock that I was just looking at, IAG. and we're down 15% on this. Obviously, I've only just got one share in this because I was just taking a look at this. I've not really researched into it. It was just, it looked cheap, and I think it is cheap. 6p ratio. I know the price to earnings, airlines don't normally have high P ratios, so bear that in mind. But they've got a lot of growth coming their way from what I've heard. So yeah, I was just intrigued to know how this would do. Obviously, if I was making a position into this, my average wouldn't be down 15% because I'll be slowly averaging in, so it'd be more like down like 6%. But yeah, it's just an interesting one that I'm just keeping an eye on. Same with Nike. They've got their earnings, I believe, this week coming up, so that'll be interesting to see how that does. Down 8% if I was to have had a bit of position on this. Obviously, it's hard to say with this because I would be averaging down, so it wouldn't be actually 8%. It would be more like 4 or 5 because you'd be averaging down. So Palantir, what a interesting week it's had. It's up 2.6% on the week. Yeah, Palantir had their AIP con, and yes, it's interesting because they were talking about all the different partnerships that they've had, and people like Walgreens, people like Wendy's were coming on and talking about how they use their software and real life situations of how they use it. And it was really, really interesting. Guys, you might want to check that out and see how it all works. Yes, it's complicated how it works, and you don't need to exactly know how the product 100% works. And you just want to get a gauge of what it is doing and why it's helping as much as you can. Because it is a complicated software and a complicated situation of what Palantir can do, because it can do endless amounts of things, and it's helping people save a lot of money, and it's also spotting a lot of situations that humans might just naturally just always get wrong, or, do you know what I mean, just come up with mistakes, because that's just what humans can do. We always can make mistakes, and it's always hard to constantly keep track of, especially with big organizations with big supplies or big situations that they need to sort out. Palantir can sort that situation out, and it can speed things up very, very quickly. Things that could take a month or months can end up taking weeks, if not a few days, with Palantir. So it speeds up processes massively. And that's what the Wendy's guy was talking about. In the last 24 hours of that day, they ended up releasing like 10 different partnerships, and one of them was Qualcomm, which I think's really, really, really huge. Massive. And it just shows you Palantir is really scaling and rapidly growing. And this is exactly what we wanted to see. Obviously, it's commanding a huge valuation, so it needs to live up to that if it can keep hold of that. But regardless, Palantir is now starting to get the recognition it deserves. And yeah, it's just insane. So SoFi has actually started to climb. Even on down 3.67%, I was buying a few shares at 11 and under 11. And yeah, we've got 1,550 shares. And I just really would like to get 2,000 if I can, but we will see. And they released a huge partnership. So SoFi reached an agreement with Blue Capital. This is huge because it's huge for the loan platform business, because that's a new business that they've released in the last few quarters, in the last quarter or so. The Blue Capital agreement, which was 5 billion, it's made it so it's added on 6.9 billion to the business platform, which means now the loan platform business is now an annualized revenue run rate of 293 million, which is huge because this has only just started. I also want to show you a little run through of how the loan platform business works, and so you get a bit of an idea of how it works, because it's quite interesting what they've done. So just shout out to Data Driven Investing. This guy is a legend, and his video is really, really interesting if you want to check out a channel about it in more depth. And I'll just summarize what he's kind of said and what the situation, how it works. So the loan platform business pretty much takes out SoFi as the middleman. Before they were having SoFi as the middleman, and obviously there's only a certain amount of loans that they can possibly take and take on the risk, and they've pretty much cut that out. So the borrowers will go straight to the debt investors, which is obviously like Blue Capital. So then that's how they make the money, and from making the money they get referral fees, which they were having before, but then on top now they can get the direct sales. So before they had 1 billion in originations, and this was the breakdown before a few months ago when it came out, and they ended up getting a total revenue of 61 million from that roughly. And obviously, like you can see, 13 million in referrals and 42 million in direct sales. So these were the early projections of what he had before even knowing about this deal, obviously, because this is 2 months ago. And he was showing you the take rate. So taking it, which will be about 4.5% is on average what the take rate will probably be. And 6 billion would mean 270 million for the year. And these were just projections, obviously. So then now that we've got the deal, which will be 6.9 billion originations, that means we'll get about a take rate of 293 million in annual revenue, which is crazy because this is kind of a new whole business plan, a new business that has started with SoFi. So that was huge, that massive deal with Blue Capital. And that's why I just wanted to quickly run through briefly how it kind of works. Hopefully that helps a bit. I know I really kind of went through that very quickly and very brief. So if you want to check out Data Investing, he's got a much in-depth video of it all. Tesla, this has had a huge tough time, down 4% on the week, but it was a lot worse at one point. $214 it went to. And I didn't pick up any shares because of buying up AMD. Tesla's been that stock that's been getting hit hard, really, because of, I think, the whole Elon Musk situation, really. Elon Musk is getting involved so much in the politics side of things and getting involved with Trump that a lot of people aren't liking that and feeling like he's steering away from the company and not concentrating on it. And I think that's why it's got hit hard. Obviously, the valuation of how it is currently, people arguing about it because they see it as a car company. Obviously, I don't see it as a car company. I see it as a tech company, and it's got a lot of innovations coming its way, like Optimus, FSD. The energy sector is going to get even bigger, what they currently have, and the robo-taxi situation business model that they could possibly have. So there's got a lot of different situations that Tesla have got that I think will be huge in the future, and that's what a lot of people are paying for with valuation. That brings the total portfolio to 73,500, and I've gone up 3.8% on the day. It kind of brought up and made it kind of break even for the week. And obviously I've gone up a bit because I've deposited some money and bought into some shares. So yeah, well, but technically we pretty much break even from the week. So yeah, hopefully you enjoyed this video. Subscribe if you're brand new, hit the like button. And also, if you do want a free fractional share, like I said, then click the link in the description or use code BEN and you'll get a free fractional share worth up to £100.